And of course, as you start seeing long-term treasury yields fall, that's supportive for equity prices, it's supportive for stock prices, particularly those more interest rate sensitive areas. So that kind of leads me to the next chart I want to talk about here, John, and what I think is truly probably the most important chart for the market right now. And this is just it's just this updates daily, but it's a chart of the 10-year U.S. Treasuries yield. So this of course is the long bond. People are talking about that. This is the best proxy we have for interest rates. Particularly mortgage rates, borrowing rates for consumers, even for businesses. And you can see of late, of course, this has just been in a very consistent series of lower lows and lower highs, making its trend down. And of course, as you start seeing long-term treasury yields fall, that's supportive for equity prices, it's supportive for stock prices, particularly those more interest rate sensitive areas. So the consumer cyclicals, the discretionaries, the home builders. That's why you've seen all of those names rally so strongly of late. That's where all the money's been rotating to. But again, is seeing this chart right here. If we continue to see further pressure to the downside on these long-term yields, regardless, this is going to be supportive for stock prices. Whether again it's those areas that are more interest rate sensitive, or even in the large cap tech names. Of course, technology historically has always performed quite well when we have interest rates falling. So, I think this chart right here is one that traders should be watching just to see if this current trend continues.